operating a real estate business. And this section is going to have to do with how do we get started, how do we operate the business itself. Obviously, every broker who starts out and opens up an office needs a business plan. They need to have a mission statement. They need to know where they're going. And probably to start with, you're going to have to say, what kind of capital am I going to need to get my organization started? And there's a lot of expenses that a broker's going to have. On page 2-4, I've got a list of things that you might want to take a look at. There are a lot of costs involved. It's more cost than you think. And you know what's interesting? I did a survey a number of years ago that the average associate that works for a broker is going to cost that broker $2,000 plus each month just to have them there. So I guess the bottom line is that if an agent is not making a broker around $2,000 a month, that agent is costing that broker money. At the bottom of page 2-5, when you're trying to figure out what your budget's going to be and how much money you're going to need, I always tell people that you're going to need to add 6 months of operating expenses into whatever you're planning to spend to open up an office. It takes at least 6 months before cash flow starts to come in. I think we all know the difference between a buyer's market and a seller's market. I think the easy way to remember that is which one is in the minority. If there's less sellers, they're in the minority, and it's going to be a seller's market. That means prices will go up. Brokers have to be cognizant of their company dollars. I got to tell you, anytime that you're trying to set a budget and you're looking at buyer's markets and seller's markets and saying, where do we think the trends are going and where do we think our revenues are coming from? The next thing they got to do is sit down and say, I've got operating expenses that I got to pay for, so therefore I've got to know where my company dollars are coming from. Let me define for you company dollars. Company dollars are your gross revenues coming in from a brokerage minus all commissions paid out. That includes commissions paid to co-brokers and also commissions paid to your sales associates. That's your company dollars. Projecting expenses can be extremely difficult sometimes. But remember, you're going to have fixed expenses and variable expenses. Your rent is going to be there. Some of the things that may shift around a little bit might be your electric bill. It may be a number of other things, but you're going to have some combinations. In order for a broker to be able to determine how much each agent is going to have to contribute, they need to know how to calculate the desk cost. And let me tell you how to do that. It's real easy. The broker takes all of their operating expenses, fixed and variable, and divides it by the number of agents that are working for that brokerage. And that'll break it down into each agent, what each agent's expenses bear to the broker. There's other calculations, obviously, that the broker is going to look at. Also, what brokers might want to do when they're starting their business, do I want to open a franchise or do I want to stay independent? And you know there's going to be positives and negatives about both of those. When you open up a franchise, some of the positives, first of all, you got national exposure. You've got a franchise, you've got marketing and advertising, and you've got training. There's a lot of stuff that comes along with the franchise. On the other hand, you also have additional costs that are imposed in order to operate that franchise. And typically that's handed down to the agents. They have to pay a certain fee on top of what they've got to pay already to be able to have the privilege of having that franchise. Now, if you stay an independent, I've got to tell you, an independent also has its positives and negatives. It doesn't have the national recognition. It doesn't have typically the advertising behind it. It doesn't have the marketing. It doesn't have the education. But one of the things I do know is that, first of all, it does not have those additional expenses. And let me say this also, that as an independent, these brokers can operate the way that they want to. Nobody can tell them what to do. If you're a franchise, oftentimes the franchise is going to tell brokers exactly how to manage their own business. A lot of brokers don't like that. In terms of tax considerations, just remember that most of us as small businesses, brokerages, we use a cash-based accounting system. And let me tell you what cash-based accounting simply means. If I earn a commission, I actually get paid, I have to claim it in that year to the IRS. If I have an expense and I write a check for it and pay it in that year, I can deduct it from my income. So it's we pay as we go kind of thing. Whereas your accrual basis, that's for your larger corporations that can level things out over a period of years. If you've got a big write-off that you want to write off over years, you can use that accrual basis. The difference between an independent contractor and an employee, I think, is real easy. An employee is somebody that you can tell when to come and go. You pay them a salary, you take care of their FICA, their unemployment, and the other things. An independent contractor is somebody that you can't tell when to come and go. And so there's a significant difference. You have control over the employee. You do not have control over the independent contractor. Also, termination for an independent contractor is a lot easier. Management of a real estate company and the personnel management. Let me say this about hiring sales associates. The two important things that we look for when we're hiring sales associates: empathy and ego drive. Those are the two key components that brokers are supposed to look for to make the determination if that person is going to be a good sales associate or not. Also, basic management functions we have to look at. When we talk about management functions, what causes a real estate brokerage to operate? POC is the acronym: planning, organizing, and controlling. And I've got to tell you, in the planning stages, in the early stages, that budget probably is going to help dictate exactly how that business is going to be run, and that's typically done in the planning stages. Decentralization is also an important topic, something that brokers need to understand, and all decentralization is handing down authority to other people. And anytime that a broker has sales managers, that broker's handing down those management decisions to somebody else. And there's 4 different kinds of decentralization: functional decentralization, product, geographic, and market decentralization. And probably the one that most brokers employ is going to be the geographic, and that is you have a main office and then you have a number of branch offices with managers at those branch offices. Recruiting is always going to be an issue with brokers, and there's a number of ways that brokers go out and recruit. But just remember that as you recruit agents, new agents coming in, they come into 2 categories: new agents that just got their license, and agents that have been working for somebody else that has experience that want to change brokerages. I think the real issue here is that new agents don't have any hang-ups. They're easily trained in your system. Whereas an agent coming in that works for another brokerage and they're coming to work for you, they've been trained differently in a different system, and sometimes converting them into the new system is a little bit difficult. And I think that's all I've got in this particular chapter, operating a real estate office. So what I want to do right now is I want to review with you those areas of critical concern for this chapter. A broker startup cost includes 6 months operating expenses. Company dollar is described as gross income minus all commissions to co-brokers and in-house agents. Desk cost is calculated by taking the brokerage operating expenses and dividing it by the number of agents in that office. The real estate franchise provides training and name recognition, while at the very same time, added costs to be paid for the services they provide. The cash-based accounting simply says money actually collected, reported, and expenses actually paid, deducted. Independent contractors have control issues, while at the very same time, easy to terminate. The basic function of management is planning, organizing, and controlling. Decentralization is passing down authority to others. Geographical decentralization is giving management authority over main offices and branch offices. And that's all we have for this particular chapter.